Good day, everybody. It's Greg Schnell, and I am here with the November 9th weekly market review. Thanks for taking the time to join me. Another up week for the markets, and it's been a really solid push since the middle of October. Things have been popping. I think we're 4 weeks in a row now here where we've been pushing higher, holding breakouts. It's been really nice to see. So we finally got something working, and the market's been ticking along nicely. Just to reach me, I've switched up my email to contact new updates at gregschnell.com, Twitter at Schnell Investor, and the website you can go to gregschnell.com. The agenda today, I just want to cover off autos. They're starting to perk up. There's some nice charts out there. I think we should share those. And if you're looking for my full commodities, currencies, equities, and bonds review, you'll find that under subscriptions under the private investor tab on gregschnell.com. So let's jump over and get into the autos. I want to cover this off. I think there's some nice charts here. And let's just tune up this screen a little bit. So what I want to talk about here is Ford. Looks like it's trying to come down and make a much higher low here on momentum. And if it could start to turn up, this would be nice. This isn't necessarily the favorite chart in the group, but it's just the first on my list. But I think there's also one more important factor here that I want to show, and that is that, we've had this big kind of downtrend with a couple of false breakouts. Can we start to see this turn up here? And I saw it in the new Ford Explorer the other day. It's a nice looking vehicle. Apparently they had some launch problems with it, but it's apparently in 2021 that they're going to start having a lot more technology in the vehicle. So we'll be interested to see if that can actually change the direction of the stock. I'm looking forward to checking that out to see if it can actually make it start to move forward. So anyway, on Ford here, we've got momentum trying to turn up. Volume's right around average, but what we see here is it's trying to break above both the 10-week and the 40-week moving average. Full Sto's starting to make higher highs here, which is nice. The scooter ranking is a little bit out of favor. As I said, this isn't my favorite chart in the space, but Fiat Chrysler, after doing the merger with Peugeot out of France, this one's looking a little bit better. Again, it held its gap up on the news, so that's good. GM is a more solid chart, and what I like about this one is it's bouncing off the zero level and starting to turn higher. It still needs to take out this downtrend line. And again, we got a lot of things going on in the commodity space. And so if that was going to start breaking out, I think that would really change things up. We did get a 52-week breakout in about here. It was very close in terms of time, and then it immediately gave it back. So here we go again, trying to get through this 38 to 41 area. Be interesting to see if it's got the strength. Check out this Honda Motor chart. This one really started to surge this week, way above my support and resistance line that's been sitting on the chart for a couple of years now. And sure enough, we've got a nice head and shoulders bottom here, starting to turn up. PPO has moved above zero. We're starting to break out. As the yen falls, this is helpful. So we'll keep watching to see how this is going to go. Linamar, this is a Canadian company. This one's starting to break out. We had the PPO starting to give us a clue a couple weeks ago, early October, and now all of a sudden, here we go. Second week in a row, it's going to close above the trend line, above kind of a 3-month base here, so starting to turn up. Nice chart shape. Magna tested this week new 4-month highs. I owned it in here and sold it on this up here, but it pulled back and now it's starting to take off. And we could see this is starting to break out. So I thought it was going to be another failed breakout here. Turned over and rolled up. Anyway, very close to make a new 52-week high, 74.35. Maybe we did make a new 52-week high today, 74.75. So yeah, we're going to close at new 52-week highs here on Magna. That's a good-looking chart. And in the U.S., I think it's MGA. Martin Ray, another parts company. This one's doing the same thing, breaking this trend line. So we're starting to see this on all of the part stocks in Canada, and I know the US ones have been running for a while now. Scooter ranking starting to move above 75 now. This is compared to the Canadian market, but it gives you an idea that some things are starting to improve here, and it's above both the 10-week and 40-week. That's just a good looking chart. Looking at the Nissan Motor Company, this one's been trying to turn up. There's a really long downtrend line over here that could start to be broken. I think I need to see more of a base just because it has been such a weak stock. Not really interested in trying to bottom fish that one. Ferrari had a good week. It popped up to start the week and made a new high and then closed the week on the lows, which isn't quite the bullish pattern we'd like to see out of something with a horse on the hood, but the chart in general is okay. It's not great with that kind of a pause action, but we're still looking to make a higher low here in momentum, and that would be a nice turn up. I'll probably adjust this upslope line here to kind of capture this recent low because it didn't break down much more after losing relative strength. But do notice that the scooter ranking is starting to weaken, and we saw this back last year where the scooter ranking kind of wiggled along and then gave out. So perhaps Fari's got a little more time to consolidate a base there. Toyota Motor, we've been talking about this chart for a few weeks now already, but this thing is on fire, breaking out to the upside. Really had a nice week this week, up 3%, but by far the nicest chart in the automotive space. Tesla had the big pop and has been holding this flag pattern on this pole. That's pretty nice. The PPO is up at the highest level going back a year and a half. So this chart has finally started to improve, and that's a really nice thing to see. If we open up this chart a little bit, there's also a big downtrend line on Tesla that is being broken. Let me just go grab this. That is broken here, and I think that one's even more important, that kind of the 2-year downtrend and momentum is starting to turn to the upside, and we saw that back in here where we had the same sort of break, and when we get that, that's nice. So anyway, right now it's flagging. Give it a chance to consolidate, but I think this one wants to turn up higher. Again, they have the Chinese car plant opening, so that one looks pretty good. And they did have a profit last quarter, which I think surprised everybody. Anyway, keep watching Tesla for price action, but it's trying to hold the move up, so that's good. Tata Motors the chart doesn't enthuse me too much yet. I do want to see it break out of this $15 level. If it starts to get above 15, I'd at least be interested, but this bump up to 17 was kind of a 3-week move and then dropped again. I want to see it get above all of this resistance where these people who bought in here want to sell, and if it could start to do that, I think you'd have a better chance of getting an upside breakout. So again, the auto sector looks strong here. Some charts starting to turn up. If we go look at the actual broader industry, let me just go find up a little bit farther. Here we go. On the daily chart, what we see is the chart had a downtrend, broke above, and now is starting to push higher here. But this is new, 8-month highs, something like that, very close to taking out the February highs. Anyway, it wouldn't take much to get to new 52-week highs, and we're really close to doing that. So keep an eye on this chart. The momentum looks pretty darn good on it, and Tesla is a big help in there, but I like this one. This is the weekly chart, and you can see this 2-year trend on the PPO for the whole industry has stayed below zero since February of 2018 and is now pushed above zero. That gives me much more encouragement that something's going on, and we saw the same sort of thing back in here. Let's just annotate that up. Maybe we'll use rectangles, sure. But when we got this break above the zero line here, and now we get this break above the zero line here, both of these look good to me. And I can't tell you if the volume surge happened here. This doesn't look like it was just from low to high, so something different went on here. But this change in PPO momentum, I think, is one of the things we really want to watch that. So if you can get that breakout on this, I think that would be a wonderful move. And again, if the autos are going to start moving, this paints a much bigger picture for that. So I would encourage you to take a little bit of time this weekend and see if there's anything there for you. But I like the fact that that's starting to break out. And again, we got this new 6-month high here, just kind of rolling through like this. So this is a good looking chart, finally starting to push. Let's make that a black line, and getting above this base. But it's down here with this momentum that I really like, and we can probably get rid of this question mark now on the chart, wondering if it was going to roll back over. So things are looking up in the autos, and that's a very bullish sign. I'd like to see the RSI kind of tag the 70 level. That's got to start happening pretty soon. That this sector, it's been beat up. You can see it's been nowhere for 5 years. But the Toyota Motors chart is really nice. GM chart's improving. The Honda chart broke out. So there's some names in there that I think are coming. And with the yen being weak, we could go look at that yen right here. What we see on the Japanese yen is the yen has been falling down here, and it looks like it's now going to test this big uptrend line. But when the yen weakens, that's good for export stocks. I think this is the crucial point, though, is that if the big uptrend we've had in momentum is now going to fail, this is probably a better place to look, especially even for the next couple of months while it comes down to test this 7-year momentum trend line. If the yen is going to start to fail here, that could send Japanese stocks really soaring. And unfortunately for gold investors, if the yen breaks this big trend line, I might expect this gold to pull down, because I think you'll agree that the gold chart pairs pretty nicely with the yen. And when this finally broke above this 3-year downtrend, all of a sudden gold took off. And now with the rollover here, it looks like we're threatening to try and stay above the 65-week moving average, but also this upsloping trend line for 5 or 6 years. That's a big deal to me when these trend lines start to break. So watch very closely. But I think if Honda and Toyota continue to point the way, that those might be the two best names in the space. And if you one of the things to make really clear for everybody is when the yen is going down, it makes Japanese exports look more attractive. So that helps their cash flow and their sales volume. So in yen terms, so that's a really nice backdrop for a trade like that. And especially with some big companies like Honda and Toyota, they're very stable. So at least we're going to see some potential upside there. So I like that price action a lot. In the overall market this week, there were some really interesting moves, and one of the moves that I think caught my eye, let's just go here and I'll show you this, the advanced decline issues for the overall market. The NASDAQ is right at kind of this area where it keeps stalling here. So this is an important place on the chart, but I think we still continue to push to new highs, and it's holding up in terms of advanced decline, and that's very bullish. For the NASDAQ high-low data, we're still in very bullish territory above zero, holding up. And again, we made a higher high on this indicator than we have for the last year. That's very bullish. And so finally getting the stock to break out to the new highs. Now you saw the NASDAQ break out to new highs here, but it was on lower momentum or lower net new highs. This one was a higher high again on lower, very low net new highs. But look at this surge up here. We're at new 52-week highs in high-low differential. I'm using a moving average here. And we also saw that down here on the actual daily values. This all looks very bullish. And so to have this kind of a big bullish backdrop, I think there's an opportunity setting up for us there that makes this chart want to run a little bit more than we might expect. That doesn't mean we don't get wobbles or we don't get a little bit of pullback, but I still the overall market pressure here looks very strong. And until these big advanced decline lines break, I don't think we should be thinking about market downturns. That give them the benefit of the doubt that they're going to bounce off these things if they do start to pull back. Um, these big 5% wobbles that we had here on the index, these were with a lot less breadth, as I mentioned on as you go through the market, you see only half of the stocks are participating or whatever. So trying to get this whole thing to thrust up, I think, is pretty important. And right now, these breadth indicators are starting to hold up normally. At least they're, on the breakout here, they've been up here for a month. Well, they might be short-term overbought or whatever that expression is. I think the big thing that we're worried about is, can they break out to new highs? And I've got one area of the market that we really want to see kind of confirm over the next few weeks, and that's the Canadian market. And I'll show that to you in a little bit here. But this net new highs on the Dow Jones hasn't made new 52-week highs. And so that's one area to think about. But it's still okay. Like the NASDAQ starting to perk up like that, that just looks too bullish. And when I look at the advanced decline percent, this is Arthur Hill's chart from the S&P 1500, and this thing is just pinning right up against the top right-hand corner. We'll see where it ends today, but again, we were down trickles today. The stock market has been on such a run. Who would be surprised if we took a few days off and the market just reset a little bit? We don't have a Fed meeting coming until mid-December, so that's kind of out of the way. And we do have an options expiration day on Friday, November 15th. So next Friday will be options expiration day, so we'll watch that. This is one of the charts that concerns me, and the only reason I say that is a lot of times Canada will be a weaker chart than the US, but we have this opportunity setting up right now where if Canada can start to rock and actually break out to new highs, that would be seeing a weaker market kind of follow the strong higher. But more importantly, what we see here is this big downtrend that's gone on for all of 2019, where Canada's advanced decline, this moving average, has been getting weaker and hasn't really been able to break out. So the problem with this structure of the market is having the Canadian market continue to underperform. When the Canadian market underperforms, it's a better clue. And perhaps I just need to rewind this tape a little bit, add 7 months or something. But what you see back in 2018 was the Canadian market. Here's the beginning of September, and the US stock market topped up here at the end of September, but the Canadian market was already leaking. So here what we want to see is, can the Canadian market break through the prior highs and actually keep pushing up? Or is it going to give us a clue that it wants to start to drift away and fail at that prior high, much like it did back in here? So it's an important inflection point for Canada. Again, we need to start seeing more stocks participating, the advanced decline line improve. We haven't seen that yet. And so down here on these, when you change the start date, it moves the lines. But the point I want to make here is this has still got a trend of lower highs and lower lows. And this was our low here. We're slightly lower here. It's still trickling lower, but really let's call it sideways. However, this is while the US market went up 6%. The Canadian market has had no real surge in advanced decline. So that's a bit of a problem for me. So let's just say that the oil stocks all of a sudden surge. Well, something else is not surging when that seems to happen. And so that's quite an odd thing to see. Anyway, here we are sitting right at the prior highs. And this chart just says, if there was a point of failure, there's other things that we could look to. This would be one of those things, is can the Canadian market follow along and actually push these markets higher? Okay. When we look at the Canadian high-low data, it's been stuck below this level going back to the middle of 2017. Now, the problem with that, I mean, we can see the market has surged up or whatever. We haven't made any real headway since the January 2018. I mean, we're up briefly here. We'd used the scale on this side, but it was 16.5 and we're at 16.9 or something. So we're up 400 points on 16,000. It's pretty much 2% or rounding over the last year and a half. Again, we want to start seeing thrust like this where we get the net new highs starting to break out. And when we don't have that, it still lends for caution. So on the other chart I pointed out, remember how the NASDAQ had surged on to higher highs? Well, the Canadian market hasn't done that yet on the moving averages here. So we just need to, I don't want to say temper our enthusiasm. We're hitting new highs in the US. That's bullish. The real question is, why hasn't Canada followed along? Is it giving us some sort of a leading clue, or is it failing? And I think the fact that the auto sector is starting to turn up, which would be manufacturing, that's helpful. Banks have broken out, that's helpful. More industrials have started to break out. The US industrials had a pretty good week. But we have a few things that are sitting right on the edge, like the broker-dealer index hasn't broken out yet. So again, I'm not trying to throw any cold water on the rally. It's all good. What we want to see now is kind of the stuff that typically would participate in the next bull thrust take off. And if I go look, I'm just going to find that broker-dealer chart. Semiconductors, there we are. So on this broker-dealer chart, we're right at this level where we've stalled here 5 times, coming back into the September-August period of 2018. We're also trying to break this downtrend. I'd say we had a blip up here, and now what we want to see is, are we going to finally break out here? I think we do. This PPO trend line is finally breaking, so it looks to me like it wants to get going. But again, here's another thing that normally is a leading indicator and hasn't started to lead yet. So I'd like to see this hit new 52-week highs. And again, last time it did it, it literally tagged it and fell away. If it wasn't a 52-week high, it was close. Anyway, my point being, we need to start to see the rest of these things, the big bullish signals, kick off. And if I had a complaint about what's not kicking off, let's just go get a chart here. Doesn't matter which one, because I want to go and get my FANG chart. And I'm liking the price action. This week's S&P 500 was more of a doji. It was up slightly. But is this the price action you expect to see Amazon have for the week? Well, the S&P went on to new highs. Apple, this chart makes sense. Disney, the chart makes sense. But here's Facebook declining. Not that bullish. Google broke out to new 52-week highs yesterday, or closing highs yesterday. And now the real question is, today just kind of marked time with an inside bar, no big deal. But here's Netflix right on the trend line. Is this where we roll over again? And Microsoft finally had a good day after consolidating for 2 weeks here. I was really starting to wonder if it was ever going to join the party, and so today was nice. Adobe had been in a big downtrend here and is finally climbing out of it. The gap up was good, and we've consolidated with 3 candles here inside the gap range, or inside the trading range of that first gap. And then let's start to see if that can also go. So I want to see these technology stocks, again, the big names, start to extend. And Microsoft was a good hint. Netflix, not helpful. Google had a good week this week by finally taking out the prior high, and it closed above the prior high, so that was good. So closing on a new 52-week high is nice, especially as it just broke through. I mentioned in one of the articles I wrote that Google is starting to set up quite interesting with all of the Waymo and the Internet of Things and the 5G and Google Maps and drones and everything. Google has some stuff set up here that could be very advantageous. Anyway, I wouldn't give up on the chart. If it's starting to break out to new 52-week highs, that's a chart I'd actually like to own, on the assumption that as this other technology starts to kick in, you'll see it. And hopefully, if you get the chance, I think it's on my subscriber channel that on the week of November the 16th, I'll roll through all of the 5G stocks, and I think you'll find some interesting stuff there. So anyway, on the Amazon chart, I'm puzzled why this chart cannot get going, and it's really surprising with AWS and everything else it's got going that this chart is stalled. I do know that their warehouse rollout to all of these other cities, where they're putting a warehouse close to every major city, is a big strategy and costs a lot of money. But the other side of that is it's going to be able to deliver technology a lot quicker, or food a lot quicker, or whatever you buy that one day could start to run. And I want to point out a chart. Maybe I'll just go up here and get it this way. BLDP. So this chart, if you're a boomer, you might remember it, Ballard Power. It broke out way back in 2000, and the chart was ballistic. Let's just take a big picture view of this. And what you see is the chart was up here at 140, and fuel cells were going to be the rage, and it's really come down. Well, now look at this chart. It's sitting here in a 5-year range, and one of the things they have technology for is drones. And so I'd encourage you to just go to Ballard Power website. And the idea behind that is, on this website, they talk about some of their new things. And one of the things they've got is unmanned aerial vehicles. And on these aerial vehicles, they're using hydrogen, which is a lot quieter, and they'll be able to run these drones that can lift 50 pounds. So when you think of all of the things Amazon is trying to deliver, that can be helpful. Google with all of its mapping technology, that can be helpful. So I'm starting to see this stuff really pick up with the warehousing and everything. Anyway, that circle of friends is starting to be interesting, and this Ballard Power might finally have had its lows put in, and the ability to start making some serious money and getting that chart to start turning back up again. So again, even if you just pick the $5 level or $6 level, the chart's trying to get through it. And on the way here, if we could start to see it push up, I think that's a big opportunity. So with that, there won't be a Canadian Technician article out next weekend, but the weekend following there will be one, but it'll be later on in the week. So I'll be on vacation for the next 2 weeks, and it'll probably be on the Sunday or the Monday following that I'll be able to get that out. So thanks for taking the time to join me. Hopefully you've enjoyed the tour of the autos, the unmanned aerial vehicles, and a few other things like that. Thanks everybody. Have a good week and good trading. Talk to you soon. Bye-bye.